What is going on YouTube? It's Brendan from Market Makers giving you the alpha you need to succeed in these markets. So you longtime subs will be familiar with the ranch backdrop, decorated now for the fall. Had a Halloween festival here with my family and their children. And guys, I'll be up here for a while since we had the Hurricane Ian tear through where I was living, and mass destruction is down there still. So I'll be using the camera from here as often as I can. Guys, we need to talk about some big news items, and we'll jump straight into Bitcoin. I know a lot of you are salivating to see what's happening with the crypto space, but Jamie Dimon, or I call him Blood Diamond, head of JP Morgan Chase, billionaire himself, he said the other day, which the mainstream media all freaked out about, he sees another 20% downside in stocks, especially as we raise another 100 basis points to get to the Fed target rate of 4.5, 4.75 for the Fed funds rate. So I know this is shocking to mainstream media, but to subs of this show, you guys know we've been talking about this since November. Why? Because we follow people. We do our own research. We talk amongst ourselves. Follow guys like Jeremy Grantham that predicted this bubble last year, beat me to it. Follow guys like Ray Dalio, who said he sees a very dark period for stocks and equities coming, where there is just less value overall and perhaps no real returns for at least 5 years. Some of these numbers sound crazy, but 10 years is what it took you, actually 13 years on the Nasdaq it took you after the dot-com crash to break the all-time high. So what we're doing on this channel, guys, is trying to empower you so you don't have to use people like these money managers you see on TV on these panels to manage your money. You're going to be able to do that yourself vis-a-vis trading and understanding the market cycle that we're in. Guys, we updated our Rumble. We had to create a channel. So we had a profile. We weren't too familiar with how Rumble worked, but make sure you follow our channel. The link is in the video description. I'll pin it as well in the YouTube comments. Come check out our Discord, our trading room. Almost 12,000 people there now. Guys, check it out. That link is in the, or actually that's the join button right underneath the video. You can just join straight through YouTube, 100% integrated. Come check it out because you'll have all the education you need in that room with a fantastic community and professional on-staff traders. We do all types of trading from scalps to swing trades the way I trade. But guys, let's talk about right now what's happening with Bitcoin. We're looking at the monthly chart. Okay, I want to show you something on the monthly. We're going to go over the bubble targets here in Bitcoin and the equities. Okay, if we have a chance, I'll review some of our trades that we posted and we talked about here in the last week or so, including the XRP trade, which hit. Everything hit that we talked about. Okay, so let's go ahead and look at this. The reason we're looking at this, guys, is I want you to see where price is right now. You see on my chart, there's no support here, okay? There's no, you're building your own support, but there is no support here. You can say this is adoption. You can say whatever you want. The fact of the matter is equities is going to follow the market cycle, and there'll be some catalyst. It could be an escalation in the, the conflict, the word that I can't say. Could be an escalation in the conflict over there. Could be a new strain of a virus that comes out, but whatever it is, it doesn't matter because it was going to happen. That is a stock market cycle, okay? That is a market cycle. We're trading in that 7-year cycle for the last 50 years, going back to 1973, every 7th year. For every single 3 sigma bubble we have had, what Jeremy Grantham calls a super bubble, it has happened in the 7th year of the 7-year cycle, which means the bottom will be the following year. It did this in the 73 crash, dot-com crash, great financial crisis. The true bottom is next year. What we're looking for is a tradable bottom, which is what Bitcoin's going to bounce from as well. But there's no support here when you look at this chart, okay? So what you have to do is look at where it's going to, and we're going to do that here on the weekly chart. We have the Dante descent pattern. Again, 11 weekly bars down and 9 weekly bars up, 20 weekly bars between tops. This is a pattern Bitcoin is tracked to. Now, guys, this is a bottoming pattern. This is not a price pattern. There's a lot of confusion still because we get new subs all the time, okay? But what does that mean? Well, that means if Bitcoin just goes sideways, if this pattern holds true, which there's no reason it should not, as we replayed, as we've gone through 2/3 of it already, if this pattern holds true, you're trading this for the upside wherever this final bar lands, whether it's at holding still at 19, down at 16, down at 12, down at 10. As you guys know, utilizing Fibonacci, I believe this is coming down to 10,591 to 12,000. I'll show you that on the next chart. But this is a bottoming pattern, okay? Because we're trying to trade this uptrend. Now, that red box that you guys see right here, again, this red box is the average of this red box for decline and this red box for decline, and it drops you almost to the dollar at the 1618 at 10,591. Now, trading in this 7-year cycle, guys, the Shmita that we've talked about, that video, the full Shmita DVD is uploaded on our Rumble, okay? And we're going to be uploading all of our videos from YouTube that we do on a daily basis also to Rumble. So if you have a preference, but at very least, definitely sub over there because we're going to work on some exclusive content as well once the living situation gets a little bit more settled. But looking at this, guys, this is still tracking beautifully. The October 31st weekly candle, that means it goes out to November 6th, okay? October 31st weekly candle, we are looking for a tradable bottom. And if we go ahead and jump to the regular weekly chart, as you can see here, this is where we utilize Fibonacci. Fibonacci gives you tops, it gives you bottoms. Here's an example of this. We're looking at targets here, okay? Starting from that pandemic low up to your previous all-time high, down to your that swing low. Look where your 618 is. Remember, primary fib trading and Fibonacci, your 618, 1618. This is what you want to look at here for targets, okay, and retracements. And you can see we got above it, but we did not get a candle close above it. So you see that gives you the upside projection for where this went. And of course, we were shorting this all the way down. And let's go ahead and get the downside projections. I'll show you a couple different ways to do this. So you go from previous all-time high to that swing low up to that current all-time high. Look where the 1618 lines up at 10,591. Now, I've had this since roughly November, early December, okay? And people thought this was crazy. Bitcoin, of course, was going to 100K, 150K. You guys have all seen the YouTubers talking about 500K and whatnot. Now, you see the 10,591 here, guys. You see where this pattern, Dante's Descent, a candlestick pattern, averaging in the descents here along the way gets you down to 10,591. Does that mean it has to happen? No. But again, TA is about probabilities, not certainties, okay? So when you look at this, here's another way you can do this. We can do a Fib Wave projection. Remember, everything with Fib Wave trading is law of three, natural law trading. The market moves in threes. If we go from the all-time high to that first swing low, up to that next swing high, you get 12,173, just slightly above that 10,591 target. Okay, again, this is a projection this is for the 1 fib here. This is a projection, but I do believe you're going to 10.5 or 12. So this is what we're looking at here. That's one of our Discord alerts for TA there, guys. If you look at this another way, if we want to talk about Dow and Gann, Charles Dow, the original forecaster, the original market technician. Gann probably did more work on time and cycles than any other trader before him, and probably than any other trader after him. This pattern on your screen is a law of three pattern, which Gann hid in one of his books. I married it to fibs, okay? So when you look at this, there's something else you can do. Remember, Gann and Dow. So some interesting tidbits of information for you. So Charles Dow and Richard Wyckoff, they knew each other. They had lunch together. I think it was every Wednesday, okay? Wyckoff and Gann were friends. These guys were all friends. And you think about your trading group of friends, Wyckoff and Jesse Livermore were friends. Who was Jesse Livermore? The first billionaire trader. They called him the boy plunger of Wall Street. And so that's why you have the Livermore pivot. These guys all knew each other and they looked at each other's work. I'm just guessing on that level, but Wyckoff knew all of these guys. But the one thing they had in common, and what I try to show you on this channel, is to trade with the money, to understand the trend. Wyckoff used his famous, Wyckoff volatility box essentially to give you a range. Dow broke down the market in phases. And then you had Gann using angles, time cycles, market cycles. But it was all for the same point, which is to understand how the market is moving. Now, Gann and Dow talked extensively about the 50% retracement being the key retracement and the natural as in natural law, having and doubling in the marketplace. So if you want to take a fib retracement here, if you want to take a fib retracement here from the swing low, because we're going to capture this impulse, right? Your 3-wave impulse, your third wave is your largest wave in this situation. You take a fib retracement from that market low to that all-time high. And if we talk about where we could go on a projection, a 100% retracement here, and if you look at how this laid out, a 100% retracement from this move brought you to 28.8. Remember how everybody said, we're never going to lose 28. Not in my lifetime, Bitcoin will never be 28K or below 28K. And you can see you had a lot of action here at that range. But of course, you lost it. Now, if we marry this to current techniques with Fibonacci trading, you know, Fisher wrote the books, I would say, for Fibonacci trading. You can check his books out. Most of them came out in the late 90s, early to mid 2000s, and a lot of them are out of print. But I'll see if I can put a link for that. But the guys in the room know about it as well. But you might be able to find it on Amazon somewhere. But primary fib trading, guys, the 1618. So when you look at this, the 618 is the most commonly retraced to fib. Okay, and again, this is a pulled retracement, just a standard Fibonacci retracement. You can see you landed on the 618 here. You can see you barely got above the 618 here, and then you fell down, had all your turbulence there at the 1 fib. When you go past the 1 fib, you have a bias for a reversal. Okay, again, the natural halving and doubling in the marketplace. You have a bias for a reversal. That reversal would take you to the 1618, which is phi, the golden ratio. That is a ratio that is present in all forms of life throughout the universe, including the pyramids, including the relationship of flower petals, anatomy of the human body. It's all over the place. Okay, so you have a bias to come to this number, 3956. 1618, 3956. Why would that be a 100% retracement going back to Dow? Because what was this number right here at the pandemic low where we started our wave projection? Okay, well, we can just see this yellow line? You want to see some magic? You can just take this 1618, the golden ratio, put this at the bottom of the candle. Watch that yellow line. We're going to throw a trend line across it. Boom. That is a 100% a round trip from where you impulsed from, which was the pandemic low, lands you at the golden ratio 3956. You guys know I've been talking about our tradable bottom being at 10.5 to 12. And of course, next year when the market does bottom, as it will repeat the same market cycle for every bubble for the last 50 years, next year will be the true bottom. And this is the number that I have, 3956, landing you on the golden ratio, a 100% a natural doubling in the marketplace, okay? A 100% retracement from this upwards impulse waves that you've had with 41% of the money printing, a complete round trip here in the marketplace. So that's the weekly time frame, guys. And again, if you look at the weekly, when you zoom in here and pull this up, you can get some more information here as well, such as this disjointed double top that you're forming, right? You have this disjointed double top. You have your neckline right about here, 18.6-ish, as you can see, bouncing around. When this breaks, you're going to be propelling down to whatever level you will end up landing at. You could take a pause at 17.5 again. There's no support there. You could go down to 16, 14, 12. Again, 10.5, 12, October 31st weekly candle is what I'm looking at. Looking at this on the daily time frame, guys. So Bitcoin, if you look at, always look for structures, okay? Always look for market structures forming a double top here. Here's your neckline. Your neckline is right about 18.9 right here on this, okay? You come down below 18.9, you're going to have support here at the 618 at 18.646. So that's what I would be looking at to propel you down off of this, okay? Would be that 618. If you lose that, you're going to start getting some downward trajectory. Now, the PPI came out today, so it's producer price inflation. It came in hot, okay? It came in hot. The markets were all green, pre-markets and futures, and then they all turned around and they all dumped. The thinking is obviously the CPI may also be coming in hotter than expected. The street, again, expects 8.2. But, you know, if you get 8.3, even if you get 8.2, it shows there's no progress being made, further sell-off because of where we are. You hear, you know, it's funny because you hear people that don't understand natural law trading and don't understand market cycles. What do they say on CNBC, guys? What do these analysts say if you follow any of them on Twitter? They say, oh, the seasonality. October is always a bad month. Why is October always a bad month? Because in the 7-year cycle, you have the exiting of the Shemitah, which is in that 7th year, which is the acceleration phase of every single bubble we have had for 50 years. Okay, every single bubble has played out the exact same way, breaking, accelerating in that 7th year, bottoming the following year. Okay, watch that DVD uploaded on our Rumble, guys. And let's go ahead and look at Bitcoin on the 4-hour. That's what we want to see here. So if we look at Bitcoin on the 4-hour, we got to throw our TGMAs on here. Guys, something I want to show you here for trend trading purposes, if you are interested in trading some of these assets, a good hack. If you guys want to go to Fractal Trade 15, I've showed his page before. You can see it here on my screen. You can pause it and find it. Trend Gradient Moving Average. Okay, he's a member in our room, makes awesome moving averages, makes a lot of awesome indicators. And let's go ahead and do this at a 5 and 21. Use volume weighted. Well, this is how I do it. You can use whatever you want. Volume weighted 5 and 21 on a 4-hour time frame. I do it actually on all the time frames if I'm going to trend trade. And let's go ahead and change the color here on this one to make this one green. This is trend gradient, meaning it'll change the intensity, but just for demonstration purposes, let's just do this quickly. We'll just make it all one color. So we have 5. Okay, so here's 5. This is your trend. 5 and 21 cross, you can get a bullish uptrend, right? They break, if they cross down, just like this. Again, I have a trend trading video series in the room, guys. They cross bearish just like this. When you understand the primary trend in the market, big sell signal, okay? Big sell signal. Again, guys, we short it. Now, if you watched our videos last week, we talked about where to short, right? We short it up here. I told you guys we had a dragon pattern, a beautiful dragon pattern that printed. We short it here, caught this descent, and then you caught this descent. So if you want to measure the success of where this Bitcoin trade is at, because I'm in at like 20,360, I believe. This is an 8% move right now from peak to trough. You know, with leverage, it can be a very sizable move. So right now we got volatility in the range, looking to see if you can bounce back up, you know, and if you look at this, where you're going to, you know, you have the 1618, 1887, but let's look and see if there's any upside here. You know, you can do this a couple different, let me get rid of these drawings. You can do this a couple different ways. Let's look at the 1-hour chart because we want something really current. Yeah, here we go. I did it on the 1-hour chart. So 1-hour chart, you can see this, right? I know a lot of you guys go sub 1 hour, 30 minutes, 15 minutes. I tend to stay 4-hour and above. But if you look at this, because of the volatility we have with the news cycle that's coming out, the market hanging on every word that the Fed says, this is something you guys should look at. So I went ahead and laid out my trend wave fibs here. You can see I went from this swing low to this swing high to that swing low. And you get your 618 right here. You pumped above it. And as you can see, you got some wicks above it. That's a 19,125. Now, Thursday, tomorrow, is the CPI, guys. The market is going to react to that CPI. If that CPI does print hot, look for this to pull down, especially you'll see it in the equities, okay? Look for this to pull down. And remember, I don't think Bitcoin's going to lose its 17.5 until the Russell breaks its lows, okay? It has to sweep its lows from whatever that was, June. It has to sweep its June lows and go below it, and you will see Bitcoin start to break down. And we have plenty of time for this to happen, especially for this volatile as Bitcoin is. You can also see here on the 1-hour time frame, you do have basically a disjointed double top. Always look for your double top structures because when the trend gets pulled down, you want to see where your neckline is, okay? But you can look at this on different time frames. And of course, you can use different indicators as well. And let's see if this gives you anything of value. The 200 on the 1 hour and the 233 on the 1 hour, they are well above you. So everything's well above you. The moving averages, the long-term ones, have not caught up yet to the price action. In an ideal situation, you would love to see, if you were going to enter this, the price roll up to the 233, the 200, and the 1618, okay? But will it get there? I mean, if the CPI comes in slightly lower, it could easily get there. And then you want to see some topping action, okay? Let's go ahead and bounce over to the DXY. DXY is pumping up to 113.354. Now, before I made this video, the 10-year yield was spiking up as well. It's at 3.9 and change. I don't remember the exact number, but that was spiking up. The dollar's approaching the 0.5 retracement here at 114 where it retraced from before. And again, guys, my target is 116. Okay, you got 116 here, the 618 at 116. And if it breaks through that, remember this number, this magic number, 121, this is where .com crash got to before the market really cratered. Okay, and this could happen in a period, over the next period of the few weeks that we have with these candles. This can easily happen getting back up to this level, and it doesn't have to get to that level, right? We're just looking at patterns in the marketplace. Now, if we jump over to the S&P, and this is really important. We talked about this before, but let's go ahead and do this, okay? I want to show you guys something once again. We're talking about targets. How do we know where this is going? How can you figure out how the market repeats patterns, okay? This is something that you have to learn and something you have to study and do your own research on, but this is something Marbob6 in our Discord, one of my traders, he's in the room. He does fantastic trades and he makes fantastic charts as well. But when we're looking at this, we were doing a live stream and he noticed something, and he went back to 1973. He went back to these great bubbles that we have had, and he found the same exact fib retracement for a target for the S&P repeated over and over in every single 3 sigma bubble. Okay, so let's go ahead and pull this up. Now what we're going to go ahead and do is take off these other fibs that you don't need. And I want to show you the one fib, okay? The one fib, that's the most important fib here that he discovered in this pattern. And if you do the one spot 128, you can see you wicked it beautifully here. This is the .com crash, okay? You hit the same fib in 1973. I've showed that several times in the videos, but I don't want to go all the way back there. I want to get this video out to you guys. We're already at 21 minutes. And if you look at the low here from .com, when the market bottomed, once again, the following year, and go ahead and pull this up to the Great Financial Crisis peak, look where that market bottomed once again, the one spot 128. And once again, guys, it did this in the 1973 50% drawdown as well. So let's just keep going forward. And if we go to the pandemic, it didn't even have to be. Remember, this is a black swan event, they say. So if we go to that previous swing low here, pull up to the peak, and you can see the one spot 128 once again is hit, okay? So the S&P likes to hit the one spot 128. And then what happens when you apply the one spot 128 to this current massive bubble that we are trading in? Go to that swing low, go up to your peak here, trough to peak. One spot 128 comes in at 1855. That's the number based on the last 50 years of 3 sigma bubbles and we'll just throw in a black swan event for fun, that the S&P has retraced to 1855. Remember, this represents a 61 spot 8% retracement, which is the number in and of itself is a Fibonacci number, right? The 618. So you're representing a 61 spot 8% retracement here, down here, this bottom red line at 1841 on the S&P. Where's my target based on my Gann market pattern? 50% retracement, because we've hit this number every single bubble for 50 years. But this is where I believe you will end up. Now this is 2409. 2409. 2409 is a 1618. And if you look at where that brings you to, 2409, it brings you right into the bottom rung here of where you were in the pandemic. Okay, and these numbers, by the way, the S&P lost its 200, 233. You have the Russell below its 200, 233, and below its 300. The Nasdaq now lost its 200 and 233 as well. So we're getting there, guys. This is going to happen. And once again, why is this a bubble? What's one of the characteristics of this being a bubble? This big rapid pump up. Remember, the S&P prior to money printing, prior to the quantitative easing, I should say, was returning about 8% a year. After that, it was returning 10 to 11% a year after the 2008 Great Financial Crisis. And then what did the S&P do the last 2 years since the pandemic? When we printed 41% of the money supply into existence, it went up 120% in 2 years. That is the dramatic difference, and you can see this parabolic rise. And when you look at how it's falling apart, you can see, once again, just like Bitcoin, round trip, okay? Except in this case, you're going below. If you come back down to the 1841, the same fib that you have hit every single 3 sigma bubble, you are doing a 61.84% retracement at 1841. If you're round tripping, just like Bitcoin, then you're doing a 50% retracement at a minimum, and that is at 2409, guys, and that's where you're at in the marketplace. S&P here, you can see on the daily, again, you have what you would classify as a nice double bottom structure, but this double bottom doesn't mean anything if you don't get velocity. You need velocity for the move to come up, right? To have a double bottom and have a bounce. If you don't get that velocity, you get this. Here's your first bottom, here's your second bottom, here's your peak right here, and what happened? You cratered down and started leveling down. And it looks like to me, if that inflation number comes in hot tomorrow, you're doing the same thing. Might get a little baby rally up again, and then boom, leveling down, and we continue our descent below the 200, 233. Inflation number comes in light, you could see a rally, and maybe you will get this double bottom structure, and then we have to track it. Looking at the S&P here on the 4-hour time frame, once again, guys, you throw your 5 and 21 on here to see what's going on with the direction. I use the volume weighted, again, fractal trade 15, and you do have a double bottom structure. You have a classic dragon pattern here. Again, this is my favorite pattern, a trend continuation pattern. This is a great pattern. I have a video on how to draw these and understand these in our Discord, guys. And you would throw the tail across like this. In an ideal situation, you'd want to see price. Nobody would wait this long. You'd want to see price break up, break the tail. But right here, as you can see, you would have your 5 and 21. If this turned more bullish, this could be a potential entry. But again, you need velocity, and the macro drives the macro. The macro drives the macro drives the micro. There you go. I haven't had enough caffeine yet today. Let's look at the Nasdaq. So zooming in on the Nasdaq really lost to 200, 233 here on the weekly. Look at this. You're getting rejected. You tested it. You closed below it. You back tested it here. Look at this spike up you had. Big supply dump here. I'm going to try to zoom in more so you guys can see this. Big supply dump on this weekly candle. Close back below the 233. Guys, this is why I use both numbers. Okay, people keep asking me in the comments, the 200, why do I use it? Because it's an algorithmic number. Okay, this is what all the big banks and hedge funds and professional traders use. So you want to see what they're looking at, right? The 233 is an EMA. I use this as an EMA. It is a Fibonacci number. Okay, but you can see what you get with it. You can see sometimes one's used, sometimes the other's used, sometimes both are used. So I keep them both on my charts. Now the Nasdaq's going to come down here to the 618 at 10,179. Again, this October 31st candle is what my guess is. I don't have a candlestick pattern, but if the Russell and Bitcoin are both dropping, I would imagine the indexes are going to come down as well. And then we're going to be looking at trading this bottom wherever it may be, and it may go down. If it blows through the 618, you may be looking at the 300 down here. You see the 300? You may be going down there, and then we'll have to readjust our upside targets. But as of right now, 11,831 on a rally from 10,179. You could see that, and that is the Nasdaq pumping back above the 200, 233, just like it's done in previous bubble cycles, only to lose it and then capitulate. Big drop down at that point. When that happens, your 1618 getting you to 4446.0. That's right, 4,000, roughly 4,500 on the Nasdaq, which is trading at 10,798, a greater than 50% decline from where it is at now. Unbelievable? Well, believe it. You shall see. Let's look at Nasdaq on the daily. Just laid out a bunch of fibs. Getting rejected here at the one fib, 10,831. Watch the one spot 128 at 10,724. If you start losing that, you can come further down. You can see your double bottom type structure here on the daily is trying to round up, right? You're trying to get that momentum. I just don't know if you will get it. This is your GAN 45 line, this orange line, all the way back from the pandemic low. Remember, simple concept from GAN and angle trading. Below a 45 is bearish. You lose this, your long-term trend has flipped to bearish vis-a-vis geometric trading. Let's go ahead and look at Nasdaq on 4-hour. We're just going to keep powering through this. Man, we're already at half an hour. You guys hate that? I didn't get the video out last night, so this one's going to go long. And I'll probably do another video tomorrow for the CPI if we get a market reaction. Again, 4-hour time frame, there's my bearish crossover, right? 5 and 21 volume weighted. You can see we fell right down to the one spot 128 at 10,724. Money flow is still bearish. Let's go ahead and flip to the Russell, guys. Russell, again, we're talking about targets here for the bubble. Russell below the 200, 233. Russell below the 300, getting rejected once again. 3 weekly candles in a row now below the 300, holding on to our double S curve. But as you can see, I have the Russell. Again, I have the Russell and Dante's Descent as well. And that's coming down to the 618 at 1521. That October 31st weekly candle is my target for the Russell. Okay. And it's at 1677. It's $150 away. Really, that is 4 to 5 bad trading days spread out over the next 3 weeks. So very realistic targets, okay? And then the rebound would take you back up to 1765. If we hit this target, this upside target here would be 1765, that January 2nd candle, okay? We'll be looking for the next top, and then we'll be fighting the 200, 233 once again, and then we will see if we will capitulate, proving that this all was a massive bubble cycle, and that capitulation will take you down. And again, I just have a random September, October, because I feel like the market's going to take a long time to unwind with housing, multi-pronged 3 sigma bubble, first time in U.S. history. Looking at the 1618 at 697. Both the Russell and the Nasdaq, the way I have these charted, are declining over 70%. Okay, I think it's 73, 74%. Don't have the exact number off the top of my head, and I want to get through this video. So that's the targets for the Russell. Let's go to the tradable areas. So looking here at the, let's go to the 4-hour time frame. So I'm going to show you our RSVVB, right? Volatility is the reverse engineered RSI, which shows contraction. Looking at this on the 4-hour time frame below the median line, as you can see, we're starting to bottle up, looking for an impulse move to occur. And again, I do believe this will be to the downside, but I cannot predict what the Fed will say about inflation, so we shall see how that plays out. Russell on the 1 hour, we hit the 618 at 1705, got some wicks above it, could not handle it, got a double top, and of course with the hot PPI number, boom, dropped, okay? And guys, let's flip over to, let's see, we have Ethereum. Where's my Ethereum? Yeah, Ethereum. Yeah, here's our Ethereum trade. I want to just talk about this. Remember, we talked about, I told you guys, this was an area that people shorted. This was an area I was looking to short. And then look at what you got here, guys. This is what you got, peak to trough, okay? Peak to trough, 8.54% decline. As you can see, it rolled over, okay, tested the bottom, the 618 box at 1282, getting rejected at 1299. 618 top here is 1363. You may be stuck in this range until Bitcoin and everything else really does pull down, but take advantage if you feel inclined to do so. Not financial advice. Anytime you're at peak resistance, just simple trading concept, this is areas that you can look to trade with the primary trend. And what's the primary trend, guys? Down. Okay, at least if you watch this channel, it's down. I don't know about the other the other dumpster fires on YouTube, what they're saying, but looking at XRP, guys, we talked about this was an opportunity as well. I talked about how this was pumping up, and this would be an area I would be very interested in looking at a short. And of course, this came down as well, 13%. 13%. And also, this was an area traded, it was over here at this peak. So, this was also a 25% decline. So multiple short entries. That's what last week was all about, talking about these setups, how this is giving you multiple entries here, okay? And again, I do anticipate this falling down further when the markets really start to roll down. You want to look at assets that escalated, had an acceleration up. When the markets do roll, those same assets will have a deceleration or an acceleration to the downside, okay? That's what you want to look at. And if we look back at our buddy gold, man, I wish I would have shorted this up here. This is where gold is once again at that long-term, below that long-term support level that's been there for 2 years, 1672. You can see you got a double bottom type structure here. But again, need velocity. If the markets turn down hard, if this inflation number comes in hot, that means the Fed's going to stay aggressive once again, which we all know they're going to anyways. They've told us that, but the retail has to be consistently reaffirmed that it's going to stay that way. So, or else they go crazy and buy everything. But right now, just tracking gold to see what we do here at this key level. And looking at silver, silver comes down here. Silver spiked up, rolled back down. It's in its long-term support area. We're at 34 minutes. So let me just check oil real quick. Pumped up to the 300, 233, got rejected, coming back down. So we'll see if silver stays this way or if we come back up for a double top. All right, guys, check out our platform. Check out the YouTube video description to check out SimpleFX and BITGET, our long-term sponsors. Let me get this 35-minute video out to you ASAP, and I'll talk to you guys tomorrow. Take care, everybody.